Hey, good morning, everybody. Corey Schrader, Black Creek Wealth. Hope you all are doing well. Just wanted to get you some needed information to trade this week. We have a lot of things that are going on, and you are going to see a lot of just bouncing around until we get to the big day, which is going to be Wednesday. So, just a couple of things that we got. We got ISM manufacturing. That's today. We got services on the 3rd. We got JOLTS opening job openings, which the Fed looks at. You also have the interest rate decision that's on Wednesday as well. And then, of course, we have Apple earnings on Thursday, and we got unemployment rate that comes out on Friday. So just a lot of things that are going on, a lot of economic fronts. If you didn't hear, JP Morgan purchased First Republic this weekend, basically same thing that happened back in 2008 when the bank regulators came in and said, hey, someone come buy this bank and help us out. So JP Morgan kindly went ahead and did that for pennies on the dollar. So, market's all good. Everyone should just be all rejoicing and super happy. Well, I'm going to tell you, and I'm going to show you that really market doesn't know where it wants to go at this point. So what I'm going to do is I'm going to touch on a couple of things that I'm watching this week, circle back on what we talked about last week. So let's go ahead and circle back and let me share my screen here, and we'll talk about where I'm positioned and how I'm positioned. So as I told you many times, we're trading. It's very much a sideways market, so there is a lot of whipsawing going on. Case in point, when we look at where I've been positioned with the short on the S&P, market has basically been telling me to basically jump into this. And you can see back here where I jumped in, it was roughly around 1773 is when I bought in. It was right about here when the market shifted up. You can see where it crossed over here, majorly oversold, started trending back up on my oscillators. So I jumped in. We saw a huge pop, which was great. And this was Monday, Tuesday, Wednesday, where everything was doing well. And if you remember on Thursday and Friday, tech earnings came out and basically had even, again, showing more sticky inflation. Market said, well, tech companies seem to be doing well. So what are we going to do? We're just going to keep buying tech. And that's what happened. So there was a quick drop that came back. And now what I've done is I've set a trailing stop, actually a hard stop at 1680. So as I've told you, try to keep your losses as low as possible and let your gains run. Well, this week is going to be interesting because, again, with where we're positioned, is the market doesn't really know, is it going to keep going up? Is it going to now start trending back up? If you look at the S&P 500, again, it had a huge sell signal right here, went down, and then, of course, with this little jump here, it jumped back up. But you can clearly see we're still in a downward volume. It changed on Thursday and Friday. So that's something that's telling me that we just don't know where we're going. And it's trying to fight at these new highs. Again, trying to really, where I'm looking at is about 21, or what's that, 4,200 is where it's trying to get to. So basically, we're going sideways. We've been going sideways for a while now. And that's the trick is basically we're in this window right here. So I'm watching it this week, but again, I have my hard stops. If they come out on Wednesday and hey, they're going to pause and market's going to rally, I will absolutely be switching to the 3-time S&P on that. I'll be jumping into UPRO. But I'm watching this little height in this peak, because when this starts trailing back, that means my short is still active. And again, today is just bouncing around right around flat for the S&P 500. And it's going to do that until the Fed meeting. It may go up, may go down, but it's going to be flat until we figure out what's going on. So that's the first trade. I talked to you guys about Caterpillar last time. I'm still looking at the indicators here. We had 3 indicators that have shown me that, hey, it's time. We've had divergence that's having people buy back in. This is something I want you to take a look at. You can clearly see where it's almost doing like this airplane landing, where it had this massive sell-off at earnings, but then a huge buyers came back in and buoyed the price back up. So I know as a trader that there's definitely a lot of appetite to buy back into Caterpillar. Again, it's a high known name. People love it. And again, when I look at the indicators, I'm in love with the fact that this thing is starting to turn back up. And I told you last week that it was a good opportunity because some of these indicators were reading, it was time to get back into it. So again, try not to overthink your trades. If you're trading on a weekly basis, you're not playing with fundamentals so much as you are just trying to ride the momentum. So again, I would tell you that's one of my favorites. When I talk to you about volatility, this is what I want to talk to you about. So this is a 20-year treasury, and this is something that I started investing my clients into. We have never seen bond volatility so uncertain. Right now, the markets are saying the Fed's going to raise interest rates this quarter or tomorrow or this week, and then they're done. They're going to pause. We're going to see, wait, what happened? From a fundamental perspective, my belief is that they're going to raise rates 2 more times because inflation is sticky. And with that, you can go and look at the 2-year, which is what I track for my money market rates for my clients that are in it, is look at the 2-year. The 2-year has literally gone all the way down and come all the way back up. I still believe the 2-year is going to be somewhere around 4.5%. And as it gets closer to that, I'm going to really lean on that for my bond investing. So long story short is I don't think this pain is over. I really believe that Bernanke, I keep saying Bernanke. I really believe Powell is going to stick to his word, and there's pain coming. So he's hoping that people are doing the right risk management. And that's what I want to look at for us. So that's something that I'm looking at. Again, one of the other things that I would tell you is NVIDIA, this little joy, clearly still in a strong upward trend. It's got some good buying to the upside again. You can say this thing's way over its skis, but again, this is one of those things that it's a big name. People are running to the big names. I ran an analysis, and I want to show you real quick. And again, this is more from a fundamental perspective, but I want to show you is one of the things that's going on right now is, if you bear with me here, that there's a huge divergence between the top stocks and the ones that are your run-of-the-mill. And you'll see over here, I got them listed. Like RSP is equal weight, S&P is basically market weighted. So your big companies are the ones that are going to have the most influence. Well, if we look at it, this is an analysis that I ran last week. This is small cap, this is medium, market weight, equal weight, market weight technology, equal weight technology. Okay. I ran it as of yesterday when the close is. So right now, S&P 500 is up 8.6 on the year. The equal weight is up 2.6. So there's a 6% difference between the two. And that's because you have a lot of those big name companies that are heavily weighted, right? Equal weight, market weight. You can see small caps are negative on the year. You can see that mid cap is just breaking over. And then look at technology. There's a 13% difference. So those big companies like your NVIDIA, your NASDAQ, your NVIDIA, your Apples, your Googles, your Amazons, and Amazon got punched in the face. So clearly there's a divergence. Now, if you remember when SVB went under, it happened in March 12th. Well, the market went from up 7% to flat in a weekend. Since then, the market has rallied up 8%. Again, still about a 4% difference between the two. And there's even more of a divergence there with about almost 8% on the actual technology stocks. So that's something that I want you to take a look at. And these are things that I'm looking at this week. Again, from a trading perspective, please, 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 if you're looking at options, make sure that you're setting some hard stops for yourself because this volatility has actually dried up. And you can look 16% volatility on the S&P 500 over the next 30 days. That's insane. If this Fed comes out and says we are going to continue to raise rates on Wednesday as needed because inflation is so sticky, this is going to have a volatility pop. So if you are looking at it, even my spreads, I'm talking almost 2.5% away from the move, and I'm not getting any premium whatsoever. It is crazy. It is crazy. So you're having to be really, really close to the price at this point. So be very careful on your trades. I am expecting a volatility pop this week. I'm really hopeful that it falls into it. If it doesn't and I'm wrong, I have hard stops in place, and then we'll just pivot. We're not going to think about it. All right. So if you have any other questions, obviously let me know. If there's something here that you want me to look at, like UCO. UCO is another one I talked about last week. I told you guys this oil play. Make sure that you have some hard stops in place. If we look at recession, this thing's going to drop. So we want to be ready and time it because it looks like it's about to cross over. 2 of the 3 indicators are already there. So let me know what you want to know. At the end of the day, I appreciate y'all listening. And, of course, God bless. If you need anything, give me a shout, but have a great day. Take care.